So a lot of people have asked me to come and teach them how to trade forex, both at my workplace, everywhere. And I think it's better for me to do the video here on YouTube. And in this video, it will contain a lot of things maybe probably you don't know as a newbie on forex if you want to learn forex. So let's go right into the video because I don't want to take our time. Right? So what is forex? Forex is the simultaneous buying and selling of two different currency. And if you look at the word forex, it fully means foreign exchange. So how do we make money in forex? Let's go right into it. Right here, we make money in forex by exchanging two different currency. For example, if you have travel from here to another country, and another country that they are spending another currency, you have to exchange the currency you have with you from the country you are coming from to the country you are going to. For example, if you are coming from Nigeria, if you are going from Nigeria to the United States, I am from Nigeria. If you are going from Nigeria to the United States, you have to exchange the naira to dollar for you to be able to cope around there. So if you are coming from the United States to Nigeria, you have to change the dollar to naira to be able to spend the naira in Nigeria. So you have participated in foreign exchange, which is forex. So we are not trading forex in our own mindset. We just have it in mind that we are not changing currency, like we are not changing main currency in forex. But in our own mindset, we have it in mind that we change one currency to another, because we only debate on how the markets move, how the currency move, how the charts move. That's how we make money in forex trading, because we make money by the way we debate, we calculate the way the charts move. Is that it's going up or down depending on the currency we are trading. So this whole thing, you understand them step by step by the time I go deeply into what forex is. For more example, as you can all see here, right here, this is a exchange booth, currency exchange booth, where they exchange naira to dollar, dollar to pounds, pounds to euro, different currencies. So in the bank before, I'm very sure you would have seen something like this. You have seen something like this. This is the currency exchange booth, where they show the price of different currency. And if you have gone to the bank or airport, you have seen something like this. Maybe anywhere in the bank of airport, you have seen something like this, that they show the price of every different currency, the buy and the sell. Because if you can see it too, if you check closely, you will see that there is difference between the price of the buy and the price of the sell. At times the buy can be high, at times the sell can be low. That is the way forex traders make their money. It's not by just changing currency, it's not by just going to bank changing currency, but we do it in a specific way online. You can do it anywhere on your phone or your mobile phone. So right here we want to talk about how big is the foreign exchange, how big is this community. In this market we have a lot of things to talk about, like for instance we have BTC, we have different type of things they trade out there, synthetic, stock markets, all these markets, we have them all. So I want to know how big forex is to them. Forex is 5 trillion bigger than the stock market. As you can all see here, forex is a big place where people can easily make money, also easily lose money if you are not careful, because you can lose your own money and also you can make a hell money in forex trading. Forex is bigger than the stock market, and it is 5 trillion bigger than the stock market. It is 5 trillion bigger than the New York, the Tokyo and the London section, the London stock market. All these stock markets, forex is more bigger than them. So what is traded in forex? So what is traded in forex? We simply trade different currency pairs in forex. For instance, let me give an example. As you can see right here, I've already stated different pairs that we trade in forex, because there are a lot of questions. What do we trade in forex? How do we trade forex? So now we have Euro USD, GBP USD, GBP JPY, and they all have their full names. So we'll be talking about that step by step. So now we have this currency pair stated like this. These are the way they are being stated, and we have those that we call the SO. I mean the ISO right here. You can see it. ISO. They are the one that formulates this currency pair. You cannot interchange them. You cannot call it USD, Euro, USD, EUR. You cannot formulate it back like this. As you can see here, you cannot change this for this, and you cannot change this for this, because it has already been stated by the ISO, the International Organization for Standardization. They have already stated all these currency pairs like this. So if you hear EURUSD, it is EURUSD. There's no USD EUR, or there's no USD EU. There's nothing like USD EU, because it has already been stated by them. They have already stated it like this, and that's the way it has always been. So we have EURUSD, GBPUSD, GBPJPY. You will be hearing more of this while we go ahead and explain more and more about all these things. So exchanging of this currency makes us money and also collect our money at times. So forex pair are in three letters, and the first two letters are the name of the country. As you can all see here, the first two letters are the names of the country. Number one, we have USD, which is the United States, and then we have the D as the dollar. So we have the USD as the United States dollar. We also have the EUR, which is the European euro. JPY, the Japanese yen. We have the GBP. We have the Great Britain's pound, and so on and so forth like that. And we also have the exception. For instance, let me give you an example. We have this CHF, Swiss franc. You can see that the first letter is not representing the country, but it represents, I don't know what it represents by the way, but it is different. Like the AUD is still the same thing, NZD, New Zealand dollar, and so on and so forth. So we have the first two letters, though we have some exceptions where they use it to probably the first letter, they use the first letter as either the country language or the two different country name, or and so on and so forth. I don't know why they do it like that, but everything have been stated. This code have been stated by the ISO. They have already stated it. The ISO have already placed this code, and they have always been USD, have always been USD, EUR have always been EUR. And in forex, we have the base and the quote currency. If you are hearing EURUSD, so at this point we're going to be stating them. We have here EU and we have here USD. But if you want to merge them together, if you are hearing it consistently very soon, I know you'll be very soon you'll be used to all these things, hearing them, and so we need to bring it to your understanding. So this is EU, UR, USD. So we have euro as the base currency, and we have the USD as the quote currency. As you can all see right here, it has already been written in the picture I put here. So if we also have GBP. Go back. If we have GBP, okay, we have GBP, USD. Sorry for my handwriting. We have this as the base currency, and we have this as the quote currency. You can see that any currency you have at the right hand side is always your base currency, and any currency you have at your left hand side is always your quote currency. You can see we have always been using EURUSD, GBPUSD. The most traded pair in forex is EURUSD. For you to know, EURUSD is most traded pair in forex. So I don't want to go into the most traded pair. We still have a lot to go about. So okay, right here we have few major currency. Just few major currency, the major ones that are highly volatile in the market, that when you place your trade, when you put your money, it can quickly make you money. That's what we call volatile. Whenever you hear volatile in the market, it does mean that the market you're about to trade has a lot of liquidity, has a lot of pressure in it. Like for instance, I know a lot of you probably might have heard about XAUSD, which is gold. Those that trade gold should know that gold is extremely volatile. At all points, if you enter your trade now, immediately, even if you are using $1, $1 is never enough for you to trade gold. So if you want to trade, these are the major pair you should trade like as a beginner, because these pairs are very volatile and they are extremely okay for you to trade, because for you to make enough money. You can see it here. We have Euro USD, GBP USD, GBP JPY, GBP Chef, GBP CAD, AUD USD, NZD USD. All these pair right here, they are the major pair that are volatile. These pairs are traded. They are highly traded for different country, different continents. They are highly traded, and the highest pair that has been traded is Euro USD. That is why it is the first, followed by GBP. They are already stated according to the way they have been traded. So if you are to check now, right here also around there, these are the major pair, right? Then as you can see, I did not say this, let me say this now. If you are checking out of all these pairs right here, you can see this. For you to see, to understand more, you can see that all these major pairs that I talked about right here has USD with them. We have GBP USD, Euro USD, GBP USD, USD JPY, USD Chef, USD CAD, USD, AUD USD, and NZD USD. You can see they all have USD attached to them for them to be volatile. You can see, and USD is a strong pair, very strong pair, very strong currency that people, the whole country really respect USD. So you can see that USD is very volatile. So all of the major pairs USD around them. That's why you can see right here we have the USD pairs, right? We have the yen pairs. You can check them. You can zoom in, look towards them very well. We have the yen pen. We have the euro pen pairs, and all these pairs, they are stated together the way they are for you to trade. But the major one you can trade that will give you substantial money depending on how you can. It's not that you cannot trade these other pairs that I'm showing you right here. These euro pairs, yen pairs, CAD pairs. You can also trade them. They have their own volatility according to them, so you can also trade them. But the main ones that people trade the most are these pairs, are these major pairs. That's why we call them major pairs in Forex. We call them the major pairs. They are all being traded very well, but people trade all these ones, and there are pairs that they don't trade at all, that they are not in the trading market. They are there, but they don't trade them. For instance, let me give you for instance, like our country, Nigeria. NGN, yes, NGN, USD, they don't trade all those pairs, NGN, whatever, they don't trade it. There are different pairs like that they don't trade. There are two, if you are to trade them, they are not regulated yet, so they are not trading them. So they are major pairs. These are the major pairs you can trade around the market. So if you're looking for a pair to trade, I will advise you to trade these pairs around here, and you can also pick all these ones if you want. You can still pick them depending on how you want to trade. We'll be talking more on them. Who are those that control this market? Who are those that make Forex markets first? Who are those that make these Forex markets first? Who are those that control the Forex market? Who are those that push it up and down? We have the central banks are always controlling this market. For you to know, the central bank are one of the biggest market that control this market. They control it. They are not. It's not like one country. The central bank of the whole country are into Forex. That is why Forex have been there for a long time. Central bank, we have the super banks, we have the politician factor, and news. Yes, news. If for instance now, there are things that happen that makes the market go up and down. For example, around the Donald Trump election, during that time, if you are into Forex, then you see the way the market is moving up and down and wherever, going near and there. So if you see it, these people that you see around here, they are the ones that control the market. You can see here we have the government too, they control the market. We have the news and whatever, we have the central bank, and so on and so forth. They control. These are the people that makes Forex what it is. And also, if I'm to tell you, there are also some people that makes the Forex market move. You and I, we also make the market move in our own ways, but we are not up to the standard of these people that are the big funds, the hedge funds that are trading the market. So we are not up to them, but we are there to show ourselves, to make money. And some people are not there like the banks are not there to make money in Forex trading. Let me say that. Let me make that clear. Banks are not there to make money. They are there to control the level of the money that comes in and goes out of the country. For instance, if USD is weak, it's going to affect the United States. If USD is weak, it's going to affect the United States. If it's too weak, I mean, it's going to affect the United States. But if the US, and also at the same time, if USD is too strong, it's also still going to affect the United States. So that's why they control and make it level up. It goes up, it comes down, it's on level. Everything is on control by the banks, the super banks, central bank, and so on. The governments, they are controlling everything. I said it the other time that we also, as a retail trader, because we are the one that they call retail traders. We are the retail traders. Yes, I'm proud to say it, we are the retail traders. So as the retail traders, we also move the market. That's why we have those that back us up. Because you cannot afford to trade Forex if you don't have a broker. So that's why we have broker by our side. So broker are the one, they are the intermediary between you, between me and the hedge funds, like the Forex funds. They are the one that help us to change our currency, they're the one that help us to exchange, and they're the one that put us into the market. Broker it's just like they are the one that take our money, take it to the market, help us to trade, and bring it back to us and receive our profit. And if we also lose, they're the one that help us to take our money with a higher purchase. Like for now, we are still going to go into it, but let me just put it through a little bit. Broker, they are the one that help us to change our money. They are just like Aboki. If you go to Aboki now, you give Aboki your money, he will exchange it for you, and it will give you the exchange rate. If you go to Aboki, he will give you the exchange rate. You look at the exchange rate. If it's okay, you will change it with the Aboki. So broker are the one that take our money to the market, exchange it for us. If we lose, we lose. We make money, we make money. We're still going to go into it deeply, but this is what broker is. There are 6 criteria for you to choose a good broker, for you to select a good one. Broker is just like you are going to join a fund app. For you to understand more, I'll still show you different type of broker that we have. Personally, I use Deriv. So there are brokers that are okay than Deriv too. There are brokers that are okay like Deriv. So for you to choose a good and better broker, you have to get number 1, a regulated broker, the one that is backed by funds, and I don't know, a regulated one. Number 2, you have to look for a broker that has a transaction cost, a good transaction cost, spread, commission. We are still going to talk about spread, we're still going to talk about PIP, all those things, we're still going to talk about them. But you have to choose a good broker that has a good spread. All these things you understand because it's step by step. This video is not just going to open up everything to you. By the time we just to enlighten you on these things. By the time you start going to other way, you understand them. A good broker that has a good depositing ways, like a good way to deposit and withdraw your money transaction. Like you want to deposit your money into the broker, it has to be fast, so that sometimes there are brokers that they don't deposit instantly, then within 2 days. But now these have changed. There's nothing like that again. But just look for a good broker that has all these criteria. What else again? Trading platform for example, many brokers these days are using MetaTrader 5, MetaTrader 4. So MetaTrader 5 is most used these days, so nobody's really using MetaTrader 4. So I don't know, there are people using MetaTrader 4 and there are people using MetaTrader, but your broker has to be regulated with those 2 MetaTrader. Execution and close of trade is very, very important. A good broker, there are some brokers that delay your entry. Whenever you want to enter, you just click buy, they'll keep rolling and rolling and rolling. Before you know it, the market already leave the point you want to enter your trade. So you have to make sure you choose a good broker that is well regulated, has a good executing point and closing points. There are sometimes where you want to close your trade, you just click on close and the market is still rolling because of the broker you're using. So you have to use a good broker, a better one. So I'll be referring you guys to the broker I'm using. It will be on the bio. You can check my the link on the bio. I think I'll put it there in this video. After this video, I'll go and make it up. I'll put the link of the broker I'm using personally, and the broker is okay, fast depositing, fast, and everything I've listed here are those things that the broker has completely. So any broker you're also using has to have a good customer care service, because customer care service is very, very important in no matter platform, no matter wherever you meet yourself. Is it in bank, anywhere? But if you are using a good broker, if you want to use a good broker, you have to use a good broker that has a good customer care service. At times there are always problems that is going on in the markets. Maybe you execute a trade, it's still rolling and rolling, and your money is no more there. So you have to use a broker that you can call immediately or message them on WhatsApp. But the broker I'm using personally, I do message them on WhatsApp if I have a problem on my trading platform. So I do message them, I do call them, and they reply and respond. So I'll be referring you guys to the broker I'm using right here. Check my description box, you check it, you will see there. Forex market hours. These are the hours and these are the sessions that control the market. We have the London, we have the New York, Sydney, and Tokyo. These 4 sessions are the ones that control the market. So Forex market, I forgot to say this, Forex market open 24/5. Forex market open 24/5, which means Forex market open on Sunday evening 10 p.m. GMT and on Friday evening 10 p.m. GMT. So close on Friday GMT and close on Friday 10 p.m. GMT, while it open on Sunday 10 p.m. GMT. So while for other markets like Bitcoin, synthetic indices, they open 24/7. But as for Forex only work 24/5. Now, right here we have London session, Tokyo session, we have London session, New York session, Sydney session, and Tokyo session. So these 4 sessions are the session that we do trade in the market. So if you ask which session is mostly traded and the best one to trade, is around this section, from this London session to the joint of this New York session and the close of this New York session. Those are the best time to trade. Right here is the time they appear. London session starts from 8 o'clock in the morning, 8 a.m. GMT, that is our Nigerian time, because I'm teaching this lesson from Nigeria. So 8 o'clock GMT and 4 o'clock, while the New York session open from 1 o'clock to 9 o'clock. So the clash of New York session and London session is the best time to trade, because those 2 sessions are the most traded session, and they are the most strongest session to trade, and they meet together at the same time around that 1 o'clock. Just check it by yourself. The best time to trade in the Forex market is from this time, this major time. It's not like you cannot trade around Sydney session or Tokyo session. You can also trade around it, but the market will not have liquidity. There won't be pressure in the market to move the market, and you won't be able to see good opportunities in the market. But the best time to see opportunity in the market is around this New York session and London session. The clashing part is around that 1 p.m. to 4 p.m. in the evening. Now we are getting to a place that is interesting to me. We've talked about what Forex is, what broker is, who a broker is. What else did we talk about? We've talked about a lot. And now is the time we are going to be understanding how Forex do work. You understand? Now we have this is bull and bear. In this Forex industry, you will always hear this everywhere. I am bullish, I am bearish. What else again? This is the I don't know why they use these 2 elements. Maybe because of the bull and bear, I don't know, but it makes sense. Bullish, bearish. So if you are talking about bullish, like the market is bullish, it means that the market is going up. We are buying. But if you are hearing the word bearish, which means the market is selling. Bullish, bearish. So like it's just like maybe the bear is bringing the bull down, or the bull is carrying the bear up, because if bull wants to fight, it always stands up. So I don't know. So this part is always getting me attracted. So whenever you are buying, let me stick it here. Whenever you are buying, it's bullish, but whenever you are selling, it's bearish. So the markets go intertwining, up down, up down, up down. Makes us know where. That's where we get our money from. Whenever the market go up and down, that's where we get our money from. We predict how the market move. So mind you, I not say this. Forex trading is not something that you have to just carry your cash and go to the boot exchange and try to go and change your money and say you're trading forex. Forex trading is just something we do on our mobile phone. We predict the market. I know you still understand it more and more as far as we go more into it every moment, every seconds now. So we are done with this part. We are going to be going to the MT5. The next part we want to be explaining is on the MT5. So we're going to be going to our MT5 and be explaining the rest of the whole part. We are on MT5 right now, and this thing we want to explain has to be explained here. We have something we call bid and ask price. As you can see here, that's why I have to bring us here. We have the bid, BID, and ask price. ASK. These two are right here now, and you can see the market is really moving up and down. So let me show you the bid. This is the ask price. The ask price is the red one above here that you can see there. Let me change the color to blue, and the bid price is the blue, the green one you can see here. So I change it to green. Can you see that? This is the ask price and this is the bid price. This line that is moving up and down is the one that we call the bid and the ask price. The down one is the bid price, while the up one is the ask price. You can see as the market is moving up and down, up and down, up and down. That is, we are already moving you guys to the next step, the main step. So now, if I want to buy, let me change my side before I go and do anything. This is my Profem account, mind you. So it's a real account. I've not passed the Profem, but I just want to use to do example for you guys here. So mind you, if I want to buy, I'll be stated on the bid price. Let me show you an example now. If I press buy now, the market will open me on that red side. If I press on the ask price, I told you guys this is the ask price. This red one, the red one here is the ask price, while the green one below it is the bid price, right? So if you want to buy, you'll be stated on the ask price, and if you want to sell, you'll be stated on the bid price. I want you to note this down. Just put it down somewhere. If you want to buy, you'll be noted on the bid price, on the ask price, and if you want to sell, you'll be noted on the bid price. So now let's do this. I'll quickly close this because I have to I just want to take this risk on my account. So let's do this. If I press buy now, okay, maybe I should do this on another account. So as I was saying, this is the ask price and this is the bid price. The red movement, the red line is the red ask price, while the green line is the bid price. If I press buy now, you will see that the line, if I press buy now, you see where the line show is where that red line is. It shows up on that red line. So you can see this red line, this line is our buying point. So if the market should go above us, we are on profit, but if it go below us, we are on loss. Can you see that? If it go above us, we are on profit, which means we are buying, we are bullish. But if it go below us, which means we are bearish, the market is going against us, so it will be losing money while it's going up or coming down. That's how we make money for us. It's not by you taking the money to I've been facing down all this while. It's not by you taking the money to Aboki and changing it. It's by you trading. We predict the market. We predict what this thing is, either it goes up or come down. That's how we make money here in the Forex and lose money at the same time. So I won't be talking about only make money. I'll be talking about lose money too. If I'm to press sell now, you see where we are stated down on the bid price. So let's go down to the next thing, please. Size. So what is the lot size? Lot size lot size is simply the measure of value. The measure of value in the sense that you cannot enter trade with the main amount you have. As at those days, if you want to trade Forex, you have to have the major amount the market is presently in. Like currently, you can see this is EUSD platform. You can see these are the price of the market. We will be explaining everything later in another video. All these things are major things that you guys are still going to know very well. It takes time. We have to just take it slowly. These things are major things that you're going to do. Lot size, I'm going to show you guys on MT5 in this video, but still, I'll still take you guys to another video that will be explaining it better, more better, because this lot size explains how much you want to trade, used to trade. So you can see here, standard lot size. For you to enter a trade, you have to have 100,000. I mean, standard lot size 100,000, micro lot size 10,000. Meaning micro lot size is $1,000. For you to enter this trade, you have to have this amount before you can enter a trade. But because of the whole thing, and because for you to enter a standard lot size, you have to enter a one lot size. I'll be showing you guys this on our 95 account. I'm going to be showing you guys this where they state them, where they are. So, and if you enter a standard lot size, you will be having $10 per pip movement. So mini lot size, you have to have minimum of, if you want to enter a mini lot size, you have to have minimum of $10,000 before you can enter a mini lot size. Mini lot size right here. You have to have, and for you to enter it in your MT5, you have to enter 0.1, and you are going to be having $1 per pip movement. Then we also have a micro lot size, which is $1,000. Then for you to enter it on your MT5, you have to enter 0.01 lot size before you can, and your profit per pip, it will be $0.01, which means you'll be having one lot and 1 cent per pip movement. So all these things I'll be explaining them on MT5. So for us to enter this trade, we have to have at least all these amounts right here before we can enter a trade. But now, to enter this trade, if you don't have this amount, you cannot enter a trade on your MT5 or wherever you want to enter your trade. But now, that is why we have broker. Broker lend us the money to trade, and the money broker lend us is the one we call leverage. The money broker lend us is the one we call leverage. So leverage is the money that broker borrow us to trade. It's the money that broker borrow us to trade. But they borrow us to use this money. But still, if you want to enter a micro lot size right here, you can see it. This is a macro lot size. If you want to enter a micro lot size, you have to have this kind of amount, right? But still, your broker drop 99% of the money, while you drop just 1% of whatsoever money you want to put in your account. We'll be explaining all this very, very well by the time we start going into trading and everything, because can't be explained clearly here. Once you enter your MT5, you're going to understand this part. That's why I'm not putting too much pressure on it like this. I'm not putting too much pressure on it. I just want us to understand it first here. Right here, you can see we have a lot size of, we have a leverage of 1:500, which the amount you have as your balance is $500, and your broker make the whole money to be then 500 and we're going to be having, so right here you can see your broker borrowed you can see that is the amount your broker borrowed you to trade, to take a trade. This is the amount your broker borrowed you. As you can see from this point, we minus this from this, that is to get the amount your broker borrowed you for this lot size 1:5. You can see broker are the one that is helping us to make a living. So that's why you have to use the regulated broker, the one that are regulated. We're still going to talk about everything that is left. The end of the whole video. This is the last part I'm going to explain, and this one will help us. May God help us. The next video, don't forget to watch. I'll still share it to you guys. Right here is balance, and this is the amount we have in our account. Equity, if you are talking about equity is your free margin plus your am I going to pay? Let me say I enter a trade now. So guys, you can see we're already on a trade. You can see your equity is your margin plus your balance. Your margin plus your current moving balance. You can see as the market is moving, our equity is moving also. Is either minus or plus. All these things we're going to be talking about it in a separate video, where we're going to be explaining how everything we have explained in this video, how everything go about trading in general. So we're going to be talking about them in a separate video. Equity is your margin minus or plus your current balance. You understand that? Equity is your margin minus or plus your current balance. Then free margin, your free margin is just the amount of money you have left to trade is your free margin. What you can see here, we have margin level. Margin level is the amount that is floating, the way the markets have floats up and down. Everything we're going to be explaining everything in a separate video. So that's that for that. So in the next video, I'll be explaining how to enter a trade. I'll be explaining different things entirely. All these ones we have used it to clear the road. If you don't understand, try to go back to the video and watch it again. And please don't forget to subscribe to my channel. I'm just trying to pull up myself and also bring people along with me in this journey. My name is Forex. Don't forget to subscribe. Thank you.